Hello everyone. Today I will explain to you why you should or should not invest in the company ENGIE Electrabel. This will become clear throughout this presentation and in the conclusion. ENGIE Electrabel sells electricity, natural gas, energy products and energy services on the Belgian consumer market to business customers and individuals. The topics I will talk about consist first of all of the financial ratios. I will discuss the current ratio, the rates of return, and lastly the total debt ratio. Secondly, I will go a little deeper into the stock prices. And finally, I will proceed to a conclusion that will tell us if you should or should not invest in the company ENGIE Electrabel. I will start with the current ratio. The current ratio is a liquidity ratio, and this ratio reflects the relative importance of a company's net operating capital. If the current ratio is greater than 1, then you can say that the company is liquid. In that case, the company has a positive net operating capital. As you can see for ENGIE Electrabel, the current ratio over the 3 years are always below 1. Which is not such a good sign. This means that the company has a small net operating capital, and this results in a small safety margin against problems with monetizing the limited current assets to meet short-term payment obligations. The company had a bottom line in 2018 with a current ratio of 1.31. Now I'm going to take a closer look at the rates of return, which represents the profitability of the company. This analysis is very important for evaluating the future prospects of a company. Only profitable companies will be able to bear necessary future preparing investments. If you look at ENGIE's ROE, you can see that the numbers are not that good. In 2017, the ROE is even negative. For 2018 and 2019, the ROE is both less than 1%. This means that the company will not have an easy access to other sources of capital, such as new equity. In addition to the ROE, you also have the ROA. The return on assets measures the profitability of all the resources used in the business. Again, you see a negative percentage at the 3 years. These figures give a bad picture about how the company controls the invested capital. Finally, I discuss the total debt ratio. A solvent company is one that is able to repay all of its debts, both short and long term. Here you see a high rate for the 3 years with a top of 65.63% in 2018. A higher debt ratio will imply less available earnings for equity, so the financial risk for shareholders becomes greater here. Behind discussing the financial ratios, I will move on to the share prices. As you can see, it has had a peak and valley in 2020. This is probably due to the corona pandemic. The price of around 12 euros is average. It's not high, but also not low at the moment. I would recommend waiting to buy stocks of this company. So after I briefly explained everything, I can conclude that investing in the company ENGIE is not a good idea. As you could see, the numbers were rather bad than good. Several were negative. Also, the debt ratio was on the high side. And the higher the debt ratio, the higher therefore the chance that the ordinary shareholders will not be fully repaid. In addition, the current ratio of the 3 years was far from the number 1, while a company is liquid at a current ratio greater than 1. So with this as a conclusion, I would not recommend investing in this company.